Welcome back to Morning Markets on Thursday, the 26th of October. Triumph for both profit and revenue growth for Facebook last night, with the company realising their highest profit margin in years. But what's the outlook for the business? Stay tuned to find out more. Let's start with some stats to the 3 months to the end of September. Sales revenue, of which 95% actually comes from advertising, were up 23% year over year. Costs fell 7% despite the inflationary pressures which we're seeing. Much of this was attributed to the streamlining of the workforce which we've seen over the last 12 months. Operating profit margins doubled from 20% to 40%. And in terms of earnings per share, they grew by 168%, from $1.64 to $4.39, and this beat the expectation, which was $3.64. The workforce streamlining which has occurred over the last 12 months initially raised concern when it was announced. It was set to be an expectation of how the business saw their potential to continue to drive sales and profits. However, it seems to have paid dividends for the business. They've demonstrated their ability to reset and continue to grow their business and return that capital back to their shareholders. In the earnings call, senior members of Meta did demonstrate that they are seeing a big improvement in terms of their targeted advertising. They've invested heavily in terms of the technology to support targeted advertising, and this has been coupled with a pickup in the demand from their clients to invest in advertising. Bringing the two together, they've seen an increase in terms of user screen time of around 7% through that period, so that's been rewarded. In the statement, the Chief Financial Officer did express some caution, trying to manage expectations for the upcoming quarter, and that's normal in terms of earnings calls. Essentially, they demonstrated that in this quarter, they're incurring higher capital costs through their investment in technology areas. One example there includes Reality Labs, which demonstrates or aims to provide virtual reality experiences and devices for their users, a relatively new part of the business which they're investing in heavily in order to grow and become market leaders in that space. And in order to support them, they're needing to invest heavily in very high quality staff, which comes at a cost for the business, but is required to retain their market edge. The strength of Meta's results was unfortunately not enough to prop up the overall US equity market on the day. On the day, we saw bond yields move higher, back to the levels which we had at the back end of last week, 10-year Treasury bond around the 5% level. And on Tuesday, we had some disappointing results from Microsoft. So we're in the earnings season at this point in time where we're getting a lot of data and markets are reacting to that. Outside of the US, sterling investors in regions such as the UK, the FTSE 100, and in Europe returned better returns through the course of the day. Thank you very much for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.